Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Andy Baehr. He is Managing Director at CoinDesk Indices. Stephen Ehrlich, Director of Research of Digital Assets at Forbes Crypto. Thomas Perfumo, Head of Strategy at Kraken. And Michael Tanney, Senior Managing Director at Magnus Financial. We're here to discuss the digital asset momentum. Is it at peak optimism? Has it passed? And what will it look like over the summer? It is great to have everyone back with us. Welcome to Trade Talks. And Andy, that's really what the question is. Has the momentum somewhat diminished here? It feels very whiplashy.
We're trying, and it's a great panel here, a great group of people to help maybe get me rid of this idea that there is no momentum and there's nothing to hold on to. I'm looking back a couple of weeks to June 5th when there were a lot of option strategies being mentioned. We were close to an all-time high. There were predictions about the Bitcoin price, in 10 years, in 5 years. There was the wall of money that was about to come in the third quarter, and then all of a sudden everything fell apart. So I just feel like going maybe all the way back to the halving, but certainly in the last couple of weeks, we keep trying to develop momentum, and it keeps failing. So does that mean a sell and may go away listless summer like last year or not? We're not sure, but we're just looking for some direction here.
Yeah, and it's so interesting, Stephen, because it really has divorced itself from the overall market in general. I mean, we're seeing the indices at all-time highs. And what's interesting, too, even in the equity markets, if you want to correlate it there was this perception going in that the summer was going to be, kind of slow, but there are still some things under the surface.
Yeah, I'm not surprised that, the market's struggling a little bit right now. We're still waiting for the big wall of money to come in from the RIAs and asset managers. I mean, most of the money that has come into the space, I think I was at an event last week where Samara Cohen, the head of BlackRock's ETF, said that 80% of the inflows into their ETF in particular came from retail investors. So those are ones that have probably already allocated, and they're probably now playing the meme coins and other altcoins and maybe trying to position themselves for when Ether comes in. I would expect to see much more happen later into the fall and into the winter as some of these big platforms finally onboard these ETFs into their systems and not just rely on customers coming to them saying, we want to buy Bitcoin, but they're actually going to promote it and sell it outward.
Well, let's talk to the advisor here, right?
Yeah, you're talking about the marketing spigot gets turned on. It hasn't been turned on yet. You think about the wall of money that's going to come rushing in when the big names start to say, we recommend 0.5% or 1% allocation to this space. The amount of money is just going to be incredible. So a rising tide is going to lift all ships. We have clients, they're invested in specific coins at times, but generally speaking, just own the infrastructure because all this money is going to come in, and you can't guess which one will be the winner now. But there are going to be a lot of winners. The next Google, Alphabet, they're all there already.
Yeah, I mean, you think about it, Thomas, from the institutional perspective, that interest still continues to grow. And of course, we have to remember it's part of the national conversation. Right now, we are starting to see framework getting developed around it. And I would argue having that framework is more of a catalyst than getting products approved because it's a wider swath.
Yeah, I think from the institutional perspective, it's always been this kind of job risk mentality. Is this a product that has legitimacy? How do we validate it? How do we even pitch it to clients downstream? And so from Kraken's point of view, for example, we recently launched our Kraken institutional offering, which is this kind of wholesale a collection of products that we offer historically to our institutions. And we've seen institutional volume or corporate volume on the platform grow 60% year over year in the first quarter. So they have been participating in the market, but to the earlier points, you still have people holding back. So they're not offering it to the downstream clients. You have even players like Vanguard, huge institutional platform that has an enormous amount of assets under management, and they still haven't made it available to their clients. So I think we're still at early innings, and now that we have directionally more positive tone around legislation, at least in the US, I think that's going to open up doors down the line as far as institutional participation.
And Andy, you and I just having come back from Consensus, I would say in terms of coverage, and I've been covering it since 2018, the three themes I got were capital markets integration. Of course, everyone was talking about the regulatory framework, but even coming from crypto evangelists themselves, it's not so much what's happening with core architecture and developers and engineers. They want the user experience to be perfect, and that's the key to adoption. And that's the first time since I've been covering it where it came to what the users want.
For sure, and that's a very narrow channel, unfortunately. Like what RIAs can do through turnkey asset management platforms and through direct investment is great, and that's a channel where we need more energy, like what you're doing, to be broader, to help create more bandwidth. What Kraken's doing to make a broader set of tokens available to a broader set of institutional investors, make it safer, more familiar. But right now, what do we look at every day? We're either looking at what the Fed's doing or what the Bitcoin ETF inflows or outflows were like the last day. It's just too narrow a track really to develop the kind of momentum where we can really feel comfortable that prices are going to accelerate. And if it's just even Bitcoin ETF flows, then the whole rest of the market will follow, right? The correlation is still so high that Solana and the other 20 or 30 more tokens kind of behave the same way. So we need to improve the user experience, we need to include the breadth, and we need to get the messaging tighter.
And Stephen, you have a piece that's coming out in Forbes around the fallout with Binance and FTX as examples. Tell us briefly about that, and then if you think that fallout has removed a lot of the obvious bad actors.
So yeah, the piece you're referring to, it published on Friday, and really it was led by actually our director of data analytics, Javier Paz, in conjunction with a really terrific forensics team called Grey Wolf. And it kind of builds on an investigation that we all did last October, where we found out that Binance's ICO, kind of those pseudo IPOs where people send out white papers and raise millions of dollars in tokens with a little more than a promise, was vastly undersubscribed. And as such, CZ, Changpeng Zhao, the currently incarcerated founder of Binance, is in jail. We realized that he owns 64% of BNB's entire $90+ billion market cap, and we increased his net worth from $31 billion to over $60 billion. And I think like the big takeaway from that story, and I think kind of speaks to the broader conversation, is just that I'm starting to see a real dichotomy between Bitcoin and in some ways all the other crypto assets. I mean, Bitcoin, as Tomas, you were saying, like most people now won't get fired for suggesting Bitcoin in their portfolios, and that's a big deal. But when we talk about even Ether and then BNB and exchange tokens and meme coins and Solana and altcoins. I mean, all these different things. I mean, we want a great user experience, but I think we're still looking for that killer use case. And I mean, right now, if we're going to start talking about the Ether ETF, I don't know how many, it's going to be tough maybe for investors to say, you want to go to one of your clients and suggest the Ether ETF when it starts trading over the summer. They're going to say, well, what do people use it for? Well, creating magic money boxes so they can lend tokens and get new tokens, and what is this actually all for? I don't know. And then even with Ether, there's so many competitors, unlike with Bitcoin. It's going to lead to a real, I think there's still going to be a bit of a reckoning in crypto trying to figure out what are those use cases beyond just Bitcoin.
But isn't it's an infrastructure play versus a store of value play with Bitcoin?
That's a good point. So you can look at Bitcoin, for example, and say, I want Bitcoin, it's digital gold. And maybe you have a point. I don't know. I can't tell you where it's going to be tomorrow. Gold hasn't moved in 20 years, but I still understand why people own gold and why you want to own it in certain environments. So maybe Bitcoin is gold. But you want to own the infrastructure. This is the simplest way to think about it. If you go back 20, 30 years, go back to where you saw the internet opportunity and you said, wow, this is going to be amazing. This is huge. And I look at the names then and I say, these are the 3 names I'm going to own. And then fast forward, how many of them are still in business in the same example? Yeah. So instead, don't pick 1 or 2 winners. Own the whole basket, right? Just own it all. Because at the end of the day, as clients get more educated and they start to understand the applications, like think about if you're refinancing a mortgage, how many pages you have to sign to the same exact document. And if you make the mistake, it's on you, you have to redo it. Or you can go through, the equivalent of like, I know you're you know you're me, we both agree, boom, done. There's so much productivity in this. So I think as these companies and as the infrastructure starts to mature, you will see cases where people are using it in real life and they'll say, wow, that made my life so much better. And that's when the adoption just accelerates like wildfire.
This is just like the very Nasdaq-y example of the QQQs 25 years ago, right? Where nobody was going to name the bottom 25 Nasdaq stocks in the index. It wasn't a big benchmark. It was a liquidity engine, but it also became this kind of convenience tool for people to get the future of tech. I agree, buy the basket. CoinDesk 20 is our representation of this, very, very liquid. I think the case for Ether and the distinction between the case for Bitcoin is maybe a possible thing to deliver to first-time digital asset investors, but after that, the other 23,000, it just gets exponentially harder. So I agree. Get the basket, get diversification, and you'll have the survivorship bias of the winners.
Yeah, well, I mean, it's almost like if you think about the tech sector, there are hardware companies, there are software companies. They don't all do the same thing just because they're in the tech sector. Bitcoin has a use, Ether has a use. So, I mean, you have to figure out meme coins and altcoins and so forth. is there really a use case
Yeah,
for them?
and there's different narratives around it too. So for example, with Ether, you have the whole concept around staking. You don't have that with Bitcoin. It seems like it's off the table for the ETFs. Maybe down the line that changes, but also the issuance. So Ether is actually, their supply has actually declined a little bit since the last year and a half since the merge because of how the burn mechanism works there. So that narrative's different. Spot liquidity on Ether is about 60% of that of Bitcoin. It's a smaller asset. And so the benchmarks and comparisons are going to be interesting to see how it plays out, but it's a little bit hard to say, oh, it's everything that we see in Bitcoin, we have to apply it to Ether, and we're going to see different results.
I mean, I understand what all of you are saying. I guess maybe it's just me being a little jaded, being in the space since I think 2012, and still not seeing like not one real use case for something that can't be done on anything other than a blockchain. And Ether, I understand the case for understanding infrastructure, so on and so forth. But I would imagine maybe one question some investors will have to start fielding is from an investor. Why not just buy Coinbase? You get the exchange business there, and now they have their own blockchain that is the fastest growing and it's going to be generating meaningful revenue for the company very soon, even if they don't issue a token.
I think you're 100% right, and that's exactly the argument. Think about the conversation we're having compared to a decade ago, right? It's education, it's applicability, yeah, absolutely. You should own the exchange, and you should own individual stocks. You should own the whole thing. Absolutely. Think about it from an investment perspective. What is the market value of Meta right now? 1 trillion roughly, right? Something like that, 1.2. Mm-hmm. What's the market cap of Bitcoin? Roughly the same. So I picked Meta. And now go to the S&P 500. I think it's like 30 trillion, 35 trillion. You don't have to be that right to make a lot of money in the space as an investor. There's so much asymmetrical upside. So it's such a big opportunity that's staring at you that you miss it half the time because it's so big you just can't see it.
Mm-hmm.
Yeah. Well, I mean, also when we start to see institutional products be developed as well for risk management tools, which we discussed at Consensus as well, to me, I mean, that's a good sign because now portfolio managers can do something with it.
As we announced at Consensus that we're working with New York Stock Exchange to develop index options on Bitcoin, which will be, if regulated a certain way, would be eligible not only for institutions but for individuals as a great risk management tool. That's important. The whole market structure offshore, the crypto native market structure, operates with such intelligence and such growth, and actually, obviously on much better rails than it might have done several years ago. So there's a whole market structure. Developing that is going to improve products, that's going to improve risk management, it's going to improve delivery. We're still going through this very narrow channel into the US investment community, both from a regulatory and an education point of view. But in the end, the cardinal rules of investing, diversification, risk management, are going to prevail for the digital asset class, just like they do for equities or other assets.
It's 12 years old, that asset class, right?
Yeah, you make it sound like a long time.
And it also wasn't even, there weren't even clear rules until like a couple months ago when they decided to make one of the potential anti-rules like not happen, right? I know there's a lot of negatives, but we're getting this clarity.
Yeah, I feel like my kids are more responsible for the gray hair than crypto is.
That's right.
At least you have hair.
You do make a good point. I mean, the article and talking about exchange tokens, it just brings up this topic of methodologies and exclusion and eligibility. People may not know what the top 100 Nasdaq names in the Nasdaq 100 do. They may not know what all the tokens in the CoinDesk 20 or larger, broader indices do. But they do expect some exclusions for things that really shouldn't be part of the set. And I think that we work hard, you work hard to think about what kind of guidelines should be put on what people have access to. And exchange tokens is a great example of that. Privacy tokens is another example of that.
Yeah. And to what we were saying before, the more products that are being developed, the more accessible it is. And when you start to get that framework around it, I think that's really what the key is, right? We were discussing off camera before, but regulation by enforcement isn't necessarily the best way for anything to be regulated because you don't understand what your guidelines are.
Yeah, you probably know better than most right now.
Regulation by enforcement is tough. But we look around the world. We look to the European market, not always the bravest region in the world when it comes to new ideas. Having exchange traded products, having broad, and we're over in London next week. The meetings that we have lined up are for a bunch of things that won't ever make it to U.S. shores soon. So we just have to keep demonstrating a lot of success and a lot of good investment products, a lot of good, well-governed market structure, and eventually, trust will build.
I think you're going to see the biggest capitulation. So we had a tremendous couple of weeks, right, with all these things coming out. I mean, just really positive across the board. Arguably the best week or two in the history of the markets for crypto or digital assets. But I'm curious, Tomas, you mentioned something about talent, and I have talked to a lot of the managers we allocate to, and they follow talent. It's very important to them to see the flow. And during the last bear market, they didn't see too much retrenchment in talent. They actually saw more talent coming in from incumbent technology companies that we all look to say the giants. So I'm curious, are you still seeing that talent flow? Because it seems to be the primary driver of the maturation of this asset class. And it would make me feel better too.
That's a great question.
Yeah, good
This
question.
is very anecdotal, but whenever we put a job online, in some cases we'll have to take it down quickly because we have so many applicants that we have to get through.
Right.
So crypto job market, in my opinion, like you have a ton of people who are interested in it. It really is like a next generation technology. When you think about millennials or Gen Z, these are people who are a little bit more advanced in their career or just starting. They want to work for a company like Kraken or a decentralized company because they kind of feel like they're at the edge of the technology and they really like to touch it and feel it and play with it and grow it. And so I think for them, they see it as a huge opportunity to get involved. And frankly speaking, if all goes well, it could be an opportunity for them financially to grow substantially versus doing a regular 9-to-5. And
we're also doing a better job of making traditional finance people a little jealous. They see the ETFs coming in and they say like, you seem to be having a lot of fun over there, and there's growth in the market, and things aren't just commoditizing and shrinking. So we're getting a lot of finance talent as well as a lot of tech talent coming in.
One thing I do appreciate about this industry very much is the culture and the enthusiasm. I mean, like, when I worked at Kraken before I joined the media there. I mean, it's exciting, and I'm sure it's the same for Coinbase and plenty of other startups too. And how much people believe in I remember March 16th, 2020, when everything was going to zero, and we were having Slack conversations. And at least on the marketing team, which I was on, and we were all just saying, let's buy Bitcoin because it's either like we're going to go down with the ship or this is going to be the greatest trade we ever make. I mean, it's really I mean it in a good way, sort of like an evangelical. You know what I'm saying?
Yeah.
The evangelical.
Thank you.
Yeah.
I think it's very simple. Like, I'm a simple-minded guy when it comes to this. Even though I manage people's money, at the end of the day, simplicity is the ultimate sophistication. And just follow the money and follow the talent. And the money, I see the money. I see it coming from these big institutions. Even though their CEOs may be saying something else, follow the money. They are all investing in the infrastructure. I watch them every day. They're part of all these deals, and then follow the talent. So to me, it's such an obvious opportunity set, whether you pick the right time or not short term. Maybe there is a reckoning coming in the next year. Maybe there's some regulatory headwinds we don't realize. It doesn't matter, because fast forward over a full investment cycle, 20 plus years, you're going to do great.
Yeah, I like to reinforce that a lot. I mean, right now, crypto adoption is maybe somewhere around 10 or lower than that % of the global population. And if you really believe in this technology over the next 5-10 years, you're talking another billion or so people coming into the space for the first time. And we're only improving the UX for that, whether you're onboarding a crypto for the first time or trying applications. That has massively improved. And so I think people, the early majority in particular, are going to start seeing that value and bring it forth. And there are some interesting use cases already. I mean, stable coins, 100 billion plus. You have DeFi, 100 billion plus collateral. Like, these are pretty major, a lot of capital invested in these things, and it's working. And so I think it has a lot to show for itself, and we'll see. But yeah, I agree. If you have even 1 billion people coming in, it's massively positive overall.
Talk about total addressable market. All right, guys, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.